Now, from GPIF, Government Pension Investment Fund, President Mr. Masataka Miyazono will make the presentation from GPIF. Mr. Miyazono, please. I am from the Government Pension Investment Fund. I am the president of that, GPIF. My name is Miyazono. Thank you very much for giving me the opportunity to present to you today. So the theme that we have is our ESG investment by GPIF that I would like to explain to you today. In our ESG investment, we would like to have your understanding on that. So in Japanese public pension scheme, and also the positioning of GPIF and what kind of role that we play that I'd like to explain to you in Japan. Slide on the left-hand side of the slide, as you can see, these are the Japanese public pension for those working the age pays the premium insurance money so that it will support the elderly, and the benefit of the pension will be provided to the older generations. So that will be the supporting among the different generations of people. However, because we will have less children and aging society, the future generation would have to pay more and stronger burden on the working population. So therefore, the working population paying premiums that will be accumulated so that it will be reduced and support for the future generations. That is the accumulation of the pensions. And in the future, you'll be able to provide the benefit of the pension in a very stable manner toward a long time. As you can see on the right-hand side, in the next 100 years, this is if you look at the average of the 100 years, the financial source, the 70% comes from the premium, and then the 20% comes from the tax money, and they'll be paid by that, so that the pension accumulation percentage is about 10%. So it is not the main player, but in the future, as you can see, there will be more bigger role to be played by the accumulation of the pension, as you can see on the next page. So MHLW conducts public pension, sort of the physical exam checkup in the financial verifications, including the prices, increasing hike ratio, and then in the 100 years of times, how would that be trend in the simulation to look at the trend of the annual the pension accumulations. And from in 2019, and from case 1 through case 5, at any case until a certain time, the accumulation will be increasing. And that is common in all 5 different cases. But with the economic, if the economic scenario is in the middle, as you can see in the pale blue, so the pension would peak out in more than 50 years, 2079. That type, the 479 trillion yen of the accumulation of the pension fund. So that the accumulation of the pension that will be used as a supply of the pension will be more in the future, more than 50 years in the future. So until then, pension accumulation money will be always accumulated and not to be consumed or used from that. So this pension provisioning that will be invested and managed to increase that amount. That is the role to be played by GPIF. GPIF for the 100 year, with the time access for 100 years, from the long-term perspective, we would make investment manage and to produce the profitability from that. So next page. In terms of in the investment management of the pension accumulation, the asset ratio in the basic portfolio will be created by GPIF. And based on this portfolio, in the long-term investment and the population management, in looking at, rather than changing in the short term, but we would determine the long-term portfolio so that it will be more efficient to do so. instead of just in the short time to changing that. If it started to be April of 2020, as in the current portfolio, as you can see, the domestic debt and the international or non-Japanese debt, and also domestic equity as well as the foreign equity, so that the 1 quarter each in these 4 different categories. And also in GPIF, on our law, we cannot make a direct investment into the equity or share. So therefore, except some domestic Japanese debt, in the issue name selections and the actual, we would have to ask the other outside investment management company. Next page, page 6, our actual performances of investment. As you can see in GPIF, from 2001, we have conducted the current market investment management. After starting of that, our recent until 2021, the first quarter, that investment performance is shown here. And the blue bar chart is the profitability per quarter. And due to the change in the market, as you can see, the trending in such a way. Also, the blue-colored portion, the graph, is the accumulated profitability trend as well. And this is also reflecting the change, even though there's some zigzag, but in the long term, that is the increasing trend, as you can see here. Also, on the left-hand side, in the table, as you can see the numbers in that table, since 2001, for the 20 years accumulation profit is the 100.3 trillion yen. The annual average would be 3.70%. And so that by the June, it is the 191.6 trillion yen at the end of June 2021 for the investment managed limit amount. Due to the market change situation, that will not be less impacted from that. However, in the short-term numbers, that we shouldn't be just swayed and by the short-term numbers, but we should also focus on this long-term perspective as well. In GPIF investment management, and if we can make an analogy, we can go on a sometimes face a strong headwind as well as a tailwind as well. So that we will need to look at the waves and the wind conditions and to conduct a risk management and to continue that in a very stable manner. And in relation to that, next 2 pages that I'd like to explain, that first one is the income gain accumulation. As you can see, as I explained earlier in the previous page, the performance from the actualized capital gains from the actual income, and also the income gain which has come out of the interest rate income. And in the income gains, that is a blue card, regardless of the market change, every year you can receive this cash or dividend from that every year. And the profitability, about 50% of that dominated by that. GPIFs for the long-term investors, just by holding them, we should be able to obtain certain profitability. That is a very critical, significant substance. In the next page, page 8, this shows the trend of the equity market in Japan as well as in the U.S. Topics compared with the S&P 500, as you can see here. And as you know, the equity market faces stronger fluctuation due to the market conditions. But if you think about the economic development until 5 years, these years have been incorporated into this. And by the way, for the GPIF ESG activities that I'd like to explain to you now. As I mentioned earlier, GPIF is the more than 190 trillion yen worth of the accumulation of the pension, and about 6,000 names that we invest of the issue names, and also including corporate bond that we invest about the 15,000 issue names that we would invest. Also, in the equity, about 90% of the equity is the passive investment in the entire market. So in this way, the global can be incorporated into a portfolio, and that is called the universal owner. And as I mentioned earlier, in GPIF, the large amount of the accumulations that we designed in the longer term, and so sometimes it might take more than dozens of years sometimes it will be a very intra-generational tools that will be expanded further into the further different level of the relatives. And because of these two characteristics, ESG investment issues have been a long time. The corporate value has been damaged, or they have suffered in the GPIF portfolio, minus impact on GPIF portfolio as well. Therefore, these negative explanation need to be reduced so that each individual investment value can be enhanced, so that the entire market itself is the overwhelmingly, that is the GPIF's long-term stable profitability to be retained. That is the to contribute to the those interests. As I mentioned earlier, GPIF is active in ESG investment. That is the background of all of this. As you can see on page 11, shows all the legal law. We have the Article 79 of the Employees Pension Health Fund. In other words, from the insured person would pay the premiums, and then premium will be used for the accumulation of the pension. And today, and that is for the profits of the visitors, and safe, and also it will be done correctly as well. And the bottom chart, based on that, what we have created, GPIF at the investment principle, from the investment perspective, with a certain risk, and to gain the profits, but also ESG to be further clarified as well in the document. Next page. In GPIF, in 2015 rather, the person responsible for the UN side, responsibility for investment, PRI, and that we have made some activities, and it shows the history of those activities. In 2017, which I'll explain later, ESG indices and investment managed and collected. In 2018, those information task force to create a disclosure, and based on the TSFW, we have made agreement to that so that it will be further expanded. Various type of the ESG issues. The climate change risk, even though it may be small and minor, it would impact and making the assets, and it could happen in any of them as well. With the asset owners, you can make the investment managed, and there's a risk that you cannot eliminate all of that. And also from the long term, when the potential that could become problematic in the future as well. In GPIF, those climate change initiatives, we have the positive shared initiatives that we should engage. If you look at page 13, in GPIF, ESG investment, main part of that is the ESG indices-based passive investment. In 2017, since the start of the investment, as you can see, in Japanese, there are 4 domestic markets, and for non-Japanese, there are 3 ESG flow has been invested for that. In March 2021, the 7 indices, investment in 7 indices in total is 6.4 trillion yen in total. In each of the balance on each of the account is shown in the slide. And once it's been, indices that has been designed as such, at any rate, for the companies in focusing on sustainability of the enterprise. And these are based on these investment based on the indices, so that our own portfolio risk and return can be improved. and indices embedded companies. The company's ESG information can be further disclosed. And for these companies, ESG investment improvement and the equity market can be further enhanced so that you can see the very strong examples. In 2018, the climate change, as you can see, top right, there are two investments in the two major TCFD recommendations. And Japan and overseas, there are maybe similar package, but what the characteristic of this is for the revenues with the companies with less access, less emission perspective, and also for the very active are done as well in some companies. So these two things for the investment in indices is the 4.4 trillion yen. And for the companies, ESG information that in the past that was considered to be non-financial information, but now for the corporate values and the shareholder meetings value will be further directly connected now, so that the criticality of this is going to become more important in the future. In page 14 as well. As you can see, as I mentioned earlier, various type of the ESG investment has been made, and the engagement for the dialogue that needs to be further discussed. And with the GPIF, it can be used if the hub is difficult, and that is not prohibited, so that the investment management company do that job. And the engagement, and also voting rights of the equity. Those type of things, those that have been voted, would need fill out and so on will be explained. And also engagement, and also the rights of the resolution to be exercised. And for the investment management companies, if it is critical that they be considered, the companies that have been invested upon, that to address that as soon as possible is also very important. As you can see the table, in the climate change, in the ESG is also considered that to be very important investment fund. And also for the COVID-19 pandemic, globally speaking, for the supply chain, is the various issues involved in that. In GPIF, the large amount of investment management money is on us for the environment issues and human rights violations by refraining them from the parting. We should be able to disperse them as well. As you can see, when the investment in the issues, and there's some legal restrictions to be able to do that. And also, if you think of the policy stakeholders, it may not have any sour, and the engagement will be further accumulated in this process, or ESG indices based investments will be further done. And please look at page 15. In GPIF, in the investment principle that I mentioned earlier, not just equity, but all the assets, including debt or alternative investment, ESG elements will be further considered. On the other hand, in regards to ESG initiatives itself, it takes some time until the effect will first appear. So therefore, GPIF, in the companies that if you want to use it for the yes or no, it can be used, and also with PDCA cycle, so that we can communicate to the individual. There could be some individual ESG activity can be reported, especially for the climate change ratio, and those in TCFD was recommended, and also climate-related detailed information is being disclosed now. on page 16, in 2020, version 2020, as you can see the table 1, and climate change risks and opportunities, and those are analyzed from various perspectives. And just like in figure 2, in version FY 2020, the global warming gas emissions impact analysis is expanded to include the scope 3, so that it would cover the entire supply chain. Carbon dioxide emission are now being disclosed. And also, in the low carbon society to be achieved, and the opportunities and risk, and from the analysis of that is done as well. From this analysis, especially for the energy industry and in the chemical science industries and decarbonizations, and that opportunities outweighs. And in these type of industries, it has the very potential good technology for that. That is quite clear. And for its details, and in our homepage describes this ESG activity report, and please look at this. Thank you. And for the GPIF, in the TCFD disclosure, that significance that we are focusing on that, as an asset owner, we'd like to make an active disclosure so that it would be good for the entire investment chains, and also provide the profitability for long term as well. That is what they've been thinking. That's all. And as I mentioned in GPIF, this we have the government pension investment fund for the insured person. We like to provide an investment management to provide benefit to them, and that we like to continue to focus on ESG. Thank you very much. Thank you for listening. Thank you.
Thank you very much, Mr. Miyazono.